Welcome to another episode of the Eric Jordan CPPA podcast. Today, we're diving into an essential topic for business owners, investors, and anyone interested in understanding what truly drives business valuation in the private sector. Regina, business valuation examples. Let's begin with an important question. Who would you trust more to value your business? A 20-year accountant with added valuation training, or someone who has owned and operated a successful business like a Cobb's bread franchise for 10 years or more? I'm here to tell you why the latter is better qualified to be trained as a business valuator using the Eric Jordan 25 Factors Affecting Business Valuation methodology. On my website, pin.ca, you can explore our 25 factors methodology that we use to determine the value of intangible assets. We have a proven process, and you can also see a redacted example of our 5 senses inspection report. A powerful tool that integrates human sensory observation to gauge the health and viability of a business. Just last week, a franchise owner and his bank, RBC, chose the Eric Jordan 25 Factors Affecting Business Valuation method in combination with our 5 senses inspection report to produce a valuation that was accepted by the Canada Small Business Financing Program, CSBFP. Why? Probably because I have a strong working relationship with CSBFP's upper management. They look to me for advice, and I have the email trail to prove it. Every week, it's a different client and bank, but the process remains the same. Here's how the Eric Jordan methodology works. We start where the accountants leave off. Your accountant's job is to reduce your tax burden using every legal means possible, and they're great at it. But when it comes to valuing a business, tax value does not equal market value. I'm a Canadian personal property appraiser, CPPA, and former auctioneer specializing in intangible assets. I operate at a higher level when it comes to business valuation. The Canada Income Tax Act requires fair market value for private company valuations, and it explicitly states that intangible assets must be valued. Many people overlook this, but the CRA does not. There's a link on my website to the specific section of the Income Tax Act that proves this point. We start with the balance sheet and ask, are all your assets listed at today's fair market value? The answer is almost always no. Our job is to fix that. This often requires an asset valuation, and we're qualified to do that, unlike most accounting-based valuators. With our 25 factors methodology, we go deeper. We identify redundant capital, meaning the extra cash or assets that aren't necessary for day-to-day operations. This affects how much capital should be left in the company and what's free to be distributed. We charge a cost for capital on the balance sheet, typically around 6%, on the amount that exceeds liabilities. This step ensures that normalized net income reflects the true return on investment, ROI, after fair market wages, taxes, and all costs are paid. No smoke, no mirrors. Speaking of smoke and mirrors, have you heard of the term free cash flow to the owner? It's a term used to trick people into thinking they're seeing profit. It's not. If you're investing $500,000 in a business, you'd better know what percentage of that $500,000 you'll get back each year as true profit after everyone and everything is paid at fair market rates. Free cash flow to the owner is not that number. If you paid the current owner or operator fair market wages, the business might actually be losing money, but the free cash flow method conveniently hides that fact. This is why I call those who use it scoundrels. Then there's EBITDA. It's valid for public companies, but it's misleading for private companies. In public companies, there are large pools of shareholders and standardized financial reporting. In private companies, EBITDA can be manipulated to inflate perceived profits. Not everyone who uses it is a scoundrel. Some are just ignorant and find it convenient to stay that way. To avoid these traps, you need someone with hands-on experience. Think about it. You want the captain of a commercial airline with thousands of hours of flight time? You want the head surgeon in the operating room with years of experience under the knife? You want the art restoration specialist who's worked on million-dollar family heirlooms before touching your masterpiece? It's the same with valuing a private business. You want someone with 10 plus years of hands-on business ownership experience to recognize, weigh, and value intangible assets, not an accountant with theory-based training. Regina entrepreneurs with intangible asset-driven businesses. Murad Al-Khatib, AGT, Food and Ingredients, Inc. Business overview. Murad's company processes pulses, staple foods, and specialty crops on 5 continents. Financing, private investments, loans, and institutional venture capital propelled AGT's growth. When it went public on the Toronto Stock Exchange, it leveraged equity financing to fuel global expansion. Valerie Sleuth, Praxis Consulting. Business overview. Valerie's firm provides strategic planning and organizational development. Financing, self-funded initially. Praxis's revenues from high-profile client contracts allowed for organic growth and reinvestment. Destiny Peter, Tangles Hair and Beauty Salon. Business overview. A successful beauty services business with a strong local reputation. Financing, personal savings, small business loans, and a prestigious industry award that boosted brand visibility. Jennifer Dubois, Miyosu Business. Overview, a salon and spa inspired by Indigenous values. Financing, grants, loans, community support, and insurance payouts following a fire in 2018. Jennifer Denuden, Ivana. Business overview, a social impact real estate development company. Financing, equity investment, debt financing, and government grants for affordable housing. Amber Dalton and Caitlin Mullen, Articulate Inc. Business overview, a printmaking collective offering workshops and custom prints. Financing, arts and cultural grants, community crowdfunding, and revenue reinvestment from workshops and merchandise sales. These Regina-based entrepreneurs demonstrate how financing strategies, from personal savings to institutional investments, support growth in businesses that rely heavily on intangible assets like brand reputation and intellectual property. And I've done valuations for many franchises, and Cobb's Bread stands out. Their support for franchisees in supply chain management and marketing is second to none. Their franchise fees are justified by the value they provide. Congratulations, Cobb's, for setting a new standard. If you're looking to understand the true value of your business, I'm here to help. With the Eric Jordan 25 Factors Affecting Business Valuation Methodology, you'll get a comprehensive, transparent, and fair valuation. We'll recognize your intangible assets and maximize your business's value. Thanks for listening. This is Eric Jordan, CPPA. See you next on the next episode.
Pin.ca